Hello guys, welcome back to another Lumby trading video. In this one we're going to be doing some in-depth stock analysis on DKNG, which is DraftKings. And the reason for this is it is one of today's leading gappers, being up over 17% as we're recording this video. So to get straight into it, we can see we're currently sitting around $19, which is obviously quite far off yesterday's close of around $16.80. So what are going to be our support and resistance levels going onto DKNG? We can see that on the 4 hour we have kind of broken over and confirmed this first deviation, which you can see currently is around $15.50. And as we have confirmed it, and what do I mean by confirmed, you can see we kind of broke over, came back, retested it, and buying pressure came in, which shows us that it's going to most likely go to that next deviation. And what is that next deviation? Well, if you're only looking at the 4 hour, then that next deviation is 22.50. However, we do actually have a deviation closer looking onto the daily, which was $19. You can see actually we did hit that today. So that would be the main target we look for. So now we really have two main targets. If we can break above this $19, come back and retest it, then we would expect a higher push to around 22.50. And we can check intraday. We haven't yet been able to hold this level. So really we're currently kind of testing it again now, but we would want to see it break over and kind of break over this 1950 high as well. And then that level is most likely confirmed and we could expect a push to that 2250. However, if we're not able to kind of get over this level and stay above it, we would overall expect a fade back down to around this 1550. Then what are going to be our levels going even further out from here? So if we break even higher, then we're going to have targets around $29 or $29.50, which is going to be that third deviation on the 4 hour. And as it is going to be a third deviation, this would be really a strong target what we could look for. And what that means is if we come into this level, we're holding the stock long. Really, we're looking to get out the majority of our shares if we're looking for a short-term swing or even day trades. If you're looking for maybe longer term swings, meaning multiple months, then maybe you could look to hold on further. But the main reason we like to close out coming into the closest third deviation is stocks don't ever really tend to go past their third deviations, because if you understand standard deviations, 68% of the data trades within these orange ones, which are the first deviations, 95% between the blue, which is the second deviation, and 99.7% of the data should trade within the third deviations. So when we see a stock come into this level, we don't really expect it to push too far through, if at all, and that's why we tend to build more of a short bias view on it, because when we don't expect to go past, so we expect to short it instead. However, if it does break through that level and you're still looking for further off targets, then we're going to be looking at around $35, $36, $51 and $67 at an extreme. So they're going to be our key upside targets. Now if the stock starts to fade back and below this 1550, then where do we expect it to go? Well, you do have statistical means at around $8.75 and $3. However, that is quite far from where we are, so might not be that realistic in the short term, and that would also create a 52-week low. But if the price did come down to here and you're looking to buy DraftKings, these would be quite good prices to be getting in at. We can also look at the first deviation on the 4 hour, which would be 175. So if the stock did for any reason go that low, again, another good level to be buying. But what ones are more actually achievable and maybe be able to get there in the near future? So $12, as that is the half deviation on the 4 hour, but as it is a half deviation, we tend to reduce size and or at least look for more confirmation, because these levels aren't as strong as whole deviations. And then we do also have a level at $11, which is the half deviation on the daily. And again, the same thing. Either we tend to reduce size and or look for more confirmation, because it is a half deviation. It's not going to be as strong as the statistical mean or the first, second or third deviations. But those are the key levels that we're looking at on DraftKings. So if you did enjoy the video, don't forget to drop a like and subscribe. Hope to see you next one, and that's it. Peace.
And maybe I'm crazy.